Hey, hello everyone, and welcome once again to your very own channel, Easy and Effortless Economics. But before starting with the lecture, I would just like to thank each one of you for your continuous love and support. Though in spite of having a long gap in between, you all have been in regular touch with me. Thank you for all the emails. Thank you for all the messages that I have received. And I will surely cover up all the topics that you all have sent it to me, like the financial market, the derivative market, the cost of capital, everything. Now I'm all ready and all set to help you out in all possible way. So thank you once again. Keep sharing your love and blessings as you all are doing, and I'm always there for you. And in case if you have any doubts or you want me to take up any of the topics, you know my email address, that is drmunilanaqui@gmail.com. So you can mail me anytime and I'll be there for you. And the other email address is munila123@gmail.com. I'll try my best to cover all the topics and I'm there to help you out in every possible way. So now, as we have started a few months back with the financial accounting, and I have said that we are going to proceed with the financial accounting as well. All the topics or the areas of financial accounting we are going to cover, and then we'll move accordingly to all the practical areas or the subject that you want me to take up. So you just keep on mentioning me in the comments, or just keep on writing it to me so that I could work accordingly. Okay, so let's start with today's lecture. Today's lecture is going to be interesting, or it's of great interest to each one of you. The thing is that when you are going to start, or when you're discussing about the financial accounting, few of the things that is expected that you should know are the accounting standard. But there are so many confusions, so many things appear similar that it didn't turn out easy to remember all of these. So today's video is all about making it simpler and easier for you to understand and remember. So this is what I'm here for. Okay, so let's start with the accounting standards. Before starting with the accounting standards, let me just tell you there are 32 accounting standards, but in between there have been some of them, 2 to 3 of them were withdrawn, and few of the standards were amended, and 1 to 29 are the mandatory standards. That means every organization or the enterprise has to follow it, and the other, like from 30 to 32, these three are non-mandatory. It is up to the choice of the organization that if they want, they can take up, and if they don't want, there is no issue with that. So we are going to discuss all the mandatory and non-mandatory accounting standards. I just try to make it as simple as I can, but still if you have any doubts, still if you have any confusions even after hearing the video, but I feel that if you hear the lecture twice or thrice, you are going to get clear with the concepts. Okay, so without delay, let's start with today's lecture. First, let's understand what are these accounting standards and what is the purpose of these accounting standards. Basically, these are defined as the written policy documents which are issued by the accounting body or by government. So what is the purpose of these standards? These standards are basically meant to provide a uniformity, to provide a standard for the firm so that it would be easier for them to know that how they have to measure, what they all have to disclose, how they have to disclose the entire thing, what treatments are required for a specific type of things. So that is why it is easier, because once you know the format, you know that these all are the things that you have to do. So it will be easier for the organizations to follow that standard, and it would be much easier for the clients to understand. So let's see what are the various standards. But moving on to the standards, let's have a look at some of the important things. As I have already told you, that the accounting standard 8 has been withdrawn, accounting standard 6 has been withdrawn, and 11 was also withdrawn, but it was later amended in 2018. And the amendments that were done with few of the standards were like accounting standard 2, 4, 10, 13, 14, 21, 29. These are the standards that were amended. Amended means few of the changes or few of the new things were added into it. Withdrawn means they were taken out and they were removed from the list. So let's begin with the first one. Let's see what is the first standard. As the name says, disclosure of accounting policy. It means that everything has to be disclosed clearly. All the policies which are required or which are followed in preparing and presenting the financial statements has to be disclosed. There should not be anything that should be hidden. It has to be a clear-cut picture. Then valuation. It mentions that the determination of value at which the inventories are carried in the financial statement includes the ascertainment of cost of inventories and any written down thereof to net realizable value. Means value of inventory means it says that both the cost has to be mentioned, whether it's in a written down value or it's a net realizable value. Written down value is the value that is received after depreciation, and net realizable value the value that is realized after selling the particular asset or particular you can say property. So values of inventory say that both the values in means whatever the value that is used for the inventory has to be mentioned in the financial statement. Then comes the cash flow statement. These statements contains all the information about the cash flows. So it says the provision of information about the historical changes in cash and cash equivalents of an enterprise by means of a cash flow statement. What does he mean by cash equivalents? Cash equivalent means anything that is similar as cash. For example, the current assets. All those things which are not in cash but they appear as a cash. So all these things have to be presented or that has to be portrayed into the financial statement. Then comes the contingencies and events occurring after balance sheet. There are certain events, contingency means which are uncertain. Everything is certain and whatever has been happened is already recorded in the balance sheet, but there are certain events which are not clear and which are unpredictable. So that is the uncertain, that is the contingencies. So this statement deals with the treatment of contingency, that in case of any uncertainty or unusual happening arises, what will be the statement for that. Then net profit or loss for the period, prior period items and changes in accounting period. This is basically talks about the profit and loss from ordinary activities, extraordinary activities and prior periods items in the statement of profit and loss. Ordinary activities are the regular activities that are taking place in the organization. Extraordinary activities means the activities which are not the regular part of the business but may happen. For example, some unexplored or undecided loss by theft, fire, anything. So anything that is happening that's unusual is an extraordinary activity. So here it says a disclosure of all the profit and loss from each type of activity, whether it is from the ordinary business or it's the extraordinary. Construction contracts. What are construction contracts? First, you need to know this. It says that the this statement should be defined in the proper statement. That what are construction contracts? First, let's understand that. Construction contracts are the legally binding agreements in which two or more of the parties or the companies agree to work as a team. So it's a legal agreement. It says this standard prescribes the accounting for construction contracts in the financial statement of contractors. Means if two partners or two companies are coming together to work as one, there should be a proper agreement and that has to be properly decided and stated in the document. Revenue recognition means what are the various sources from where the revenue is going to come, whether it's going to come from the ordinary activities or by giving some of the services or interest and loyalties. So what royalties, what are the sources from where the revenue is coming, that has to be mentioned clearly. Then property, plant and equipment, also known as PPE. It says that what should be the accounting treatment, how they are going to be evaluated. This standard talks about the valuation of property, plant and equipment. Then the effect of changes in foreign exchange foreign exchange rates. It says that which exchange rates should be used by the organization or by the company. Suppose they are entering into a trading relationship with two different countries. So now both the countries have their different exchange rates. So now it is the company that has to decide which exchange rate they are going to apply or use for the transaction. In government grants, government provide grants in different ways like subsidies, incentives, and duty drawbacks. So it says the standard deals with the accounting for government grant, means how these grants are going to be added or showcased into the statements of the company. Accounting for investment, as the name suggests, it deals with the accounting for investment in the financial statement, means how these investments are going to be presented in the financial statements. Then comes the amalgamation. Amalgamation basically means joining of two different companies and coming out as one. It's like combining or uniting two of the companies. The best example of the amalgamation is Maruti Suzuki. Maruti is a different company and Maruti is an Indian based company and Suzuki is a company working in Japan. So now they have been amalgamated. Now it's Maruti Suzuki. So this is the best example of amalgamation, that how two different companies came together like Maruti and Suzuki. Now they have been combined and united as one company, that is Maruti Suzuki. So if there is any amalgamation, that has to be mentioned in the financial statement. Employee benefit, like what all benefits that are going to be provided or given to the employee, that has to be recorded in the books of the employer. The employer means the owner should know that what are the various benefits that the company is providing to the employee. So this is another standard. Then borrowing cost, if the company has borrowed money from any of these sources, that has to be clearly defined in the statement. Segment reporting, as you know, there are different segments in the organization dealing with products, services, manufacturing, fabricating. So there has to be different reporting for each of these sections so that there will be no confusion and no chaos. Then related party disclosures, it says that relationship and transactions between a reporting enterprise and its related parties. Basically, this applies that if there are more parties or there are different parties who are in touch or who are on a trading relationship with the company, the details and everything in respect to that party has to be disclosed. Lease. What is a lease? Lease is basically giving out the property to a particular organization or a company for a specified period of time, and in return they have to pay the amount for that. So that is known as lease. So if there is any leased property that the company has or they have leased it from anyone, that has to be clearly mentioned. Basically, these standards are trying to cover every area of the organization so that there should not be any misunderstanding or there should not be any unclarity about any of the aspect. Earning per share, this principle is stated for the determination and presentations of earning per share, which will improve comparison of performance among different enterprises for the same period and among different accounting periods for the same enterprise. Earning per share means the per share earning of the shares are not going to be the same for every time. So there it is used as a basis for comparison, that over the period of time, what was the earning per share for that particular share, and now what is the earning per share of that particular share. So that is the easiest way to make a comparison. Then consolidated financial statement. What are consolidated financial statements? What you should know this. Consolidated financial statements are the detailed or the complete financial statements of the parent company and the subsidiary company. Means the parent company and the subsidiaries companies. The combined statement that is prepared, that is known as consolidated financial statement. These statements are intended to present financial information about a parent and its subsidiary as a single economic entity to show the economic resources controlled by the group, obligations of the group, and results the group achieve with its resources. This is basically about, as I have told you, the parent company and the subsidiary company and its subsidiary company. Then comes accounting for taxes on income. The objective of this is to prescribe accounting treatment of taxes on income, since the taxable income may be significantly different from the accounting income. The two types of income that you have heard here is a taxable income and an accounting income. What is an accounting income? Accounting income is the income that is the difference between the revenue that the organization earns and the expenditures that is incurred. And what is the taxable income? Taxable income is the income that is considered after, or you can say the residual income that is left after paying all the allowances and disallowances. So that is why both these incomes are different. What is the treatment for investment? So the standard 23rd says, in accounting for investments in associates in the preparation and presentation of consolidated financial statements by an investor, it is required that if the investment is done by the associates, whether it is a parent or a subsidiary company, so then in that case the consolidated financial statement should be prepared. or otherwise the financial statement has to be prepared. Discontinuing operation, it is an obligation or it is a compulsion for every organization to mention about the discontinuing operation. Means if there are certain operations or certain activities they are going to end up, it has to be clearly notified so that even everyone who is a part of the organization could be well versed with that. Then interim financial reporting. What does the word interim mean? Interim means the period which is less than a year. So there is the reporting for the interim financial reporting if there is any transaction or anything that has taken place in the organization. So for that purpose, interim financial reporting should be done. So this standard applies if an entity is required or elects to publish an interim financial report. If the organization wants to publish an interim report, or if there's something they have received any sort of financial help or any disclosure they would like to make, so for that purpose they would be getting this interim financial reporting. Then comes the intangible assets. What are the intangible assets? Like the assets which you cannot see. For example, the trademarks, patents, all these are example of intangible assets. It says that what should be the treatment, how these intangible assets are going to be treated in the financial statements. The treatment of all these things are very important. That is why these standards were evolved to provide a uniformity. Then financial reporting of interest in joint ventures. When two different companies are merging, they are joint ventures are sort of a partnership in which two different companies are coming together to work as jointly as a team. Example you can take of Uber and Volvo. They came together, they entered into a joint venture. Now they are looking forward. The goal is to come up with the driverless vehicles. So this is the example of joint ventures. So it says the objective is to set out principles and procedures for accounting for interest in joint ventures and reporting of joint venture assets, liabilities, incomes and expenses in the financial statements of venturers and investors. Means if the company is having any joint ventures in any of the companies, it has to be clarified, it has to be mentioned in the properly it has to be mentioned in the financial statement. Now coming to the 28th one, impairment of assets. It is the purpose is to prescribe the procedures that an enterprise applies to ensure that its assets are carried at no more than their recoverable amount. The asset is described as an impaired if its carrying amount exceeds the amount to be recovered through use. Means the current value. The current value, to make it more simpler, let me tell you, impairment of assets means that when the current value of the asset is less than the value that is showed in the financial statement. So that is impairment of asset. So how that situation will be treated, the objective is to make sure that the asset is valued at the actual value, not at a cost which is somewhat lesser than its worth. Then provisions, contingent liabilities and contingent assets. Contingent liabilities are the lawsuits, bank guarantee, warranty. So what does this objective say? To ensure that appropriate recognition criteria and measurement bases are applied to provisions and contingent liabilities, that sufficient information is disclosed in the notes to the financial statement to enable users to understand their nature, timing and amount. To make it easier, this standard says that there should be the basis. There should be certain bases which should help to identify that these are the contingent liabilities and these are the contingent assets and these are the provisions, and this is the way these should be treated. So these are the statements, or these are the accounting standards 1 to 29 which is required by the organizations or the companies to follow. It is up to the company that whatever is in accordance, which standard is in accordance with their laws and procedures, they have to follow that. So these are main or the mandatory standards 1 to 29. Now coming to the last three, these are non-mandatory. The 30th standard is about financial instrument recognition and measurement. 31 is about financial instruments presentation, and the last is disclosure stands withdrawn. So these last three are about the financial instruments. If the organization is making use of the financial instrument, they can move ahead with this. Otherwise, even if they are using and they don't want to apply this standard, there is no compulsion for them. So these are some of the standards, accounting standards 1 to 32. Before moving on to any important part of the financial accounting, it is very important that you should know. I know it's not that easy that you should remember all the 32 standards, but yes, you should know at least that which is the for disclosure, which is for inventories, which is for amalgamation, joint venture. These are the things that you should know. Nowhere it is asked that what are these standards, you just have to write it down. No, even for any of the exams that you are appearing. But yes, randomly it is asked in between that what does AS 28 says, what does the AS 13 says. So for that purpose you need to have a proper knowledge, a well-versed understanding of the concepts. So I guess these standards were clear to you to an extent. I know it's quite an extensive topic to cover, but still, if you are going to hear the same video twice or thrice, you will definitely get a clear idea of what these standards are. Now, in the coming videos, I'm going to take up all the important aspect of the financial accounting as we have discussed. We are going to take up the what are the various rules for the various three types of accounts. Then we'll come to the journal entries, ledger, trial balance, royalty, all those things that are there in the financial accounting that I'll cover up. And in the meanwhile, I'll try to focus on the financial economics as well. So now just keep hearing this, stay tuned and keep learning. Any doubts, any questions that you have in your mind, anything you want to discuss with me, you are most welcome with your ideas, with your suggestions, and please keep letting me know that what all topics you want me to cover. Now I'll make sure that there will be regularity and continuity in your dose of getting the economics knowledge. So that's all for the day. Thank you everyone. Stay safe, keep smiling, take care. May God bless you all. Thank you.